All right, good morning, good afternoon, good evening, wherever you are, whenever you watch this, on the 1904-2020. So, I'm on a call with Prince of Humba. Welcome, Prince.
Welcome. Thank you.
Yeah, so I'm just going to speak for the first 5 minutes. And I've started a chart here on the dollar CAD, and I've just got the price chart on there. And I don't think many people trade this way, just with the price, but I'm going to try and share some price action concepts. What's a price action? So, what is price action? Price action can mean many different things. But generally, what is price made out of? I mean, there's a few general ideas that people use, different ways people see price. So the price is obviously, a very important factor. So we can put a price in a line chart, candle chart. This is also a candle chart, but it shows us the open, the close. I've never tried to trade a chart like this because it's very tricky. But a lot of the exercises on price action will show you charts just like this, with just a line, and it will show you, like, for example, that's the close. Sorry. So basically, let me just correct that. So that's the close right there, and that would have been the open. So this is a bear candle. So the candle, the price opened here and closed over here in whatever 5 minute or 1 minute, 1 hour, it doesn't really matter. Okay, so just to get stuck right in here, we're going to concentrate on the candle chart. But people use line chart, and they'd like to use that for to show support and resistance, areas that they're interested in. So, and also a matter of fact is, before I get too ahead, is the fact that not everybody will trade support and resistance the same. Certain traders will know about support and resistance, but they will look to, trade against it, etc., etc. Support and resistance, is not the be and the end all of price action. A lot of people just want to know, what is support and resistance? How can I get good at it? I wish it could be that simple, because it is not that simple. Okay, it's not just about support and resistance. It's about how you trade. A lot of the market makers and the big boys, they will make sure to manipulate support and resistance. Okay, right. So I'm just showing you areas on a 5-minute chart. It could be an hour chart, doesn't matter what it is. Areas that people might be interested in, might see of interest. So you come across here, look at that. There, price turn, price turn, price turn, price turn, so on and so forth. And this is just on this chart. This right here, this right here, this right here, and this right here. So these are just a couple of levels I can note of, but you can see market trades through this one, comes back to then through it. So, support and resistance level, if I could just be as basic as possible, it's not just a level. You're not going to look at a level and trust it with all your might. Support and resistance is one of the tools you use out of many different tools that you will read in the market. Okay, so I'm just going to go on the objects and delete all this, and I think it should be enough. Vertical line. That hasn't deleted it. No, trend line. Right. Okay, so we're going to focus on the candle, right? And we're going to focus on higher lows, higher highs, market rhythm. Now there is a button on the computer you can press to forward each candle with F12 on M24. So the first thing I notice right here is the fact that this market here made a swing low right here. It's called a swing low. Then a higher low in price. Market pulled back but made a higher low, and made a higher low right here. So if I'm just going to use the concept of higher low and just trade off of that, I'm long on this candle, okay? So I'm long on this candle right here. Doesn't matter where, it could have been there, could have been there, but I'm long here, just for the case example. And I'm going to get out once this higher low, higher high. I'm going to pinpoint the candle of entry. Invalidates itself. Simple as that. I've not seen what the chart has played out, by the way. So, okay. So the price is now near my entry. and the market is made lower, low, lower, low, lower, low, or lower high, sorry, lower high, lower, lower high, lower high. It's moved lower and lower. As long as it doesn't breach that, I'm going to stay in the trade for the moment in terms of just trading price action. Okay, and notice the first.
As long as it doesn't breach what?
This high here, this lower, this higher low here, this higher low. As long as it doesn't breach that, I stay into this price action entry. For price action purposes, I'm showing you an example of entry here. Okay, the market now, I wanted to explain. So now the market has made a confirmed higher low and also making higher lows, higher highs, higher high, higher high. Okay. Okay. So if I just factor in that price action information that we just talked about earlier, there's an area here that the market is looking at here, and this is a concern that's selling off, but I'm just going to stay in the trade based on higher low, higher high. Okay, market has come off this level that I've drawn. Now we're trading based on higher high, higher low, right? I'm going to ask Prince here, who's my representative for this price action class. Would you consider an exit here? Would you consider to exit the trade?
Can I see the place?
Can you what? Sorry.
Can I see the actual place you're talking about?
Okay.
Move the cursor to the place.
All right, sorry. I'll put a cursor on so you can see it. So it's this chart. Oops, this one. It's this bar right here. This bar right here. So
yes, I'll consider an exit.
You'll exit. Okay. For the sake of the higher low, higher high example, I'm going to stay in the trade. Why? Just for the sake of price action, not just to. This goes up doesn't mean I was right. It doesn't mean Prince was wrong. If it comes down doesn't mean Prince was right. Well, it's just for the sake of higher low, higher high. I'm going to stay in the trade. Why? Because of that higher low and higher high. Now what do I see? Look at this. Price action. Candle. Candle. You should be answering this without me even saying it. These three candles have made lower highs, lower high, lower high, without any wick on the top. There's not been any buying into that. So, in terms of price action, I should be exiting. My first concern is we've broken this higher low. But guess what? I'm going to stay in this trade because this right here is valid. This higher low right here is valid. Whoops. Shouldn't have gone that far. This higher low is valid. As soon as it breaches this higher low, I'm out of the trade. Okay, I'm out. Now the market turns and goes down. Right? This entry, therefore, has lost on here. Right? So this entry right here has lost 10 pips. I've given the trade every single chance, but I've just using one element of price action, as I made clear through this recording. Higher low, higher lows, higher highs. Reading that, right? And I hope I've made that clear. Now I'm going to go into a new phase. A new phase. And remember, the other part of price action was support and resistance. There's other elements. Okay, it doesn't stop there. There's price cycles, rhythm, etc., etc. Right, we carry on. Now this is a nice down moving market. If we make a lower high, I'm going to just get in short. There, short. So just for the case of the example, short here. This candle. Let me ask Prince here, at this point of the trade, after so many candles, what do you see as one? What do you notice about the chart now? The last 15, 20 candles. It's not a test. It's just if you kind of see what's happening.
I think it's a strong move down.
No, no. I'm just. What do you notice about this price action right here? This one here. Just after this entry, this lower high entry. What do you notice about that price action?
Can you remove the cursor?
So,
Okay. Price is a bit stagnant.
yeah, correct.
Consolidating.
Consolidated.
Yeah.
Right, another element of price action is this right here. This high. What does that trend look like to anybody that might be trading? It's range bound. It's high. It's kind of not ranging between these two lines, this lower line here and this higher line here, but rather it's a wide ranging market. It's not trending. So that's another element of price action. Okay. We'll carry on. Although the price is stagnant, I'm going to remain in the trade. But what's the key there? What's another element of price action? Reading consolidation, range, and trending market. If the market is stagnant, do you still want to remain in a trade? That's the question you've got to ask yourself when you're trading.
No, because you don't know where it's going to go the next minute.
Potentially, that's the right answer. However, let's say if you went short up here and the market was stagnant, what would you do?
I'll take my profit and go.
Okay, that's your traded answer. For me, if I was knowing the market, I would trail the stop loss above right here. I put my trailing stop loss up here. Okay, that's just what I would do. But if it was a good profit, I'd take it out. But having entered here and I see the market consolidating, normally that would be me saying, okay, we're going to get out. That's another element of price action. Market stalling, staying tight. I have not prepared these charts, by the way, one bit. Okay, at this point, the market takes us out. Right? And takes the higher low out. So therefore, the trade is exited. You exit the trade. This higher low, based on higher low, higher high. Okay, continue. So now the market has made a higher low, made a higher high. I'm now looking for a pullback to enter. A nice pullback to enter. Okay, that's just the pullback I need. I'm in on this candle. But what would you say? What would you say about this entry, Prince? What would you say? Would you say, is it a bit aggressive?
Which entry?
This last candle, this blue candle entry. So we're going to enter high. We're going to enter a buy on this blue candle.
I wouldn't enter there because it's quite on the high. It's like a buying the high.
Okay, it's an aggressive entry. Like we're saying, it's an aggressive entry. Okay, the reason why I'm going to go into this buy is there's another element of price action. Look at this rise. It's a strong rise in price, and look at this big blue candle. Then pull back, and then the pullback buyers are in. This is a strong trend. However, the tricky thing for this chart is where do we put if we're trading based on higher lows, higher highs, where would we factor? I would factor right on here as the area that I would watch for the change in the higher low, higher high perspective. Okay, so trade on. Market ranging. what do you notice? Market hits, we don't even want to call it a double top. A market hits an area twice, comes off it twice. Okay, and we're going to remain. We're trading based off higher low, higher high today. And again, I have not prepared the charts today. This is purely on price action. Okay, the market is still making higher lows, higher highs. Like I said, I factored this area as the area that we would invalidate our higher low, higher high. Okay. Right. So at this point, we've had a big move. Wouldn't you say that, Prince?
Yeah, yeah.
We've had a big move. Before we go on to that big move, what do you notice just right here? What do you notice about this and this right here? What do you notice?
Market is just ranging around there.
What have we been going through? Higher lows, higher highs, things like that. What have you been going through? That. What do you see there?
Okay, we've been going through higher lows.
We're having a higher low there, right? That's right. What did we say right here? What was this entry?
Which one?
This entry right here, sorry.
Okay, it's limit orders. A lot of limit orders.
No, what was this entry? This was entry was aggressive, right?
Yes, it was aggressive, yes.
Yes, it was buying a bit too high.
Yes.
Well, this was a little lower buy, right?
Yes.
So if you were trading, in reality, you probably would have waited for but based trade on the higher lows, we made a higher low here, so I was right in. So there's other elements to price action. What is that? Buying pullbacks, being less aggressive, being passive buyer, being a passive buyer rather than an aggressive buyer. So that's another element of price action. These are all elements of price action I'm introducing in this video. That's the aggressive. That was the aggressive entry right there. Well, in fact, right. So anyway,
what would you say? What would you say on that? On the chart, making higher lows like that. Naturally, I would think the market wants to go short.
This lower high here.
Yes, higher. First one, yes, the one with the trend line, yes.
Oh, this one.
1, 2, 3. You saw it made the higher low, 3 swings. Can you see?
Oh, this one here. What are you talking about? The one at the bottom?
From where the market started pushing back from the J hook.
Oh, from here.
From the first yellow mark.
Okay.
Yeah. 1, 2, 3.
Let me draw something. What do you mean? This one?
1. Yeah, something like that. So okay. I would think the market is going short.
You would think the market is going short because of these lower highs.
Yes.
See, that's the market. Right, the market then deceived you in this case. There's also about the market deceives. Right, the market deceives people. You either read it or you get deceived. So why are we thinking higher? Why are we thinking buying? Well, look at the low right here. We come off the low, higher low, higher low. I've told you, I've factored in. This is the area that I would change my perception on this buying market. This lower high, lower high, lower high, whereas it is a concern, but we don't breach that higher low. So 3 lower highs can't breach 3 higher lows. Get that? That's an important point, Prince.
Okay.
So these 3 lower highs, look at these. Look, I'll draw a trend line for it. We don't draw trend lines for price action. Well, you can do. Some people do, but what I'm saying is that higher lows, you don't do price action trend lines on higher lows. But look at these. Look at these. Connect these. This low, that higher low. We pull back, made a low there, and this higher low. And then you got this high, lower high, lower high. Yes, they're selling. But guess what? 3 lower highs did not breach 3 higher lows. So the buyers are stronger, right? So you look at the phase. This phase, between this phase right here. Well, we can put that one back because that's a higher low. We can put that one back. From this phase right here, between this phase and this phase, what is it? The buyers are winning, even though the lower highs are coming in, which could be a concern to your trade. Remember, I talked about momentum. This momentum was the reason, the higher lows, etc. Anyway, moving on. Now, we're in this trade right here. Okay, I'm going to remove as much of the rubbish as I can. Oops. Well, not rubbish, but the marks. We don't too much marks on the chart. So this was actually I've drawn the lines wrong, but this was an aggressive entry right here. Even though we entered on this kind of aggressive entry, this is more of a passive entry. You bought on a pullback. You bought cheap, and this on a higher low. This would be a perfect entry right here. Anyway, going on. We're trading based on high low, high high. One part of price action. One element of price action. Now what I'm going to watch for exiting the trade. I'm not going to exit the trade because it's moved massively in the favor, or as it looks like by this chart. We're going to get out of this trade when we see 2 lower highs, perhaps. I don't know. Let's see. Or 3 lower highs. We'll see. So the market keeps moving up. See that?
Naturally, would you stay that long on this
That's another question, but I'm staying in based on high lows and high highs. I'm staying in. The market has not told me to get out yet. Okay, for the first time we're getting strong selling. Okay, what indicated me strong selling? Well, there's another element price action some traders use. You've had one bear candle, then bulls. One bear candle, minor, bulls. One bear candle, bulls. In this case, we've had 1, 2, 3, and then we've continued one bear candle. So this is the first element of sellers coming in. But I'm still not out based on high, low, high, high. Okay, notice something. High, the market made a high, lower high. Okay, and confirm another higher low. Now we exit the trade. Let me just make this clear. We're trading based on high, low, high, high. High, lower high, and continued lower high confirmation. We've made a low here, pull back, and we've continued. So confirm that lower high. Now out of this trade. Now we exit that trade. Okay, that's the entry. That's the exit. 160 pip trade, Prince, based on high low. If we go back and check those other 2 trades, we probably paid those losses, or the 10, 20 pips. We'll go back and check those. But based on high, low, high, high, there's 106 pip profit. Let's see if our exit was correct, though. It might have not been. Okay, the market makes kind of a lower high. Okay, this is important. This is the high now, right? That's a lower high. And now that's another lower high. The market proving to us at the moment, if it goes into consolidation mode, that our exit was the right decision. Test the high. Okay, now there's new information. A higher low, a higher high. We've tested the high. Yeah, then again, if I was trading based on high low, high high concept, it has not broken the high. I'm not going to enter the high here on the resistance. This high here, I'm not going to enter there, unless it's a really momentous trade, you know. Okay, the market has come off. So again, market is proving to us our exit was a correct one. You know, it was a good exit. Lower high. Right, notice, as I'm playing this, notice high doesn't break the previous high here that we mentioned. If it broke that, we would have been like, oh, we should have been in. We should have stayed in. Well, we never say we should in trading. You just do your trading and take your pips or take your losses and move on. Should, coulda, doesn't work. But anyway. So lower high, I hope you're noticing those lower highs. Okay, so that's price action based on higher lows, higher highs, etc. And that ends for me this video. Prince, any comments or for this part? Anyway, I want Prince to give us his feedback or his thoughts right here before we end the video.
Okay. Actually learned a new thing today, but I do not trade based on that higher high and higher low.
I know you don't. I know you don't. But I'll tell you what, Prince. You probably have it in your mind. You trade very well, and you probably trade. It's based in your. It's in your mind, right?
Yeah.
It's. You have a strategy and method, and the method and the strategy incorporates that. So you don't actively think about that, but it's one element of price action. So that's why I've kind of made this video. It's the first part of price action. There is so many other parts. I've talked about momentum in this video. I've talked about, candles. How many bear candles there are in phases. I talked about
that one interests me because if I'm in a trade, maybe I went long in a trade and I see 3 straight consecutive bear candles without wicks. I'm beginning to reconsider my position.
That's the thing, right? That's the thing with the market, right? Although if we go back to the entry, right, let's go back to the entry for the sake of. And guys, I promise you, I did not prepare. I just scrolled back and I started F12ing this market. This entry right here, okay, it's aggressive. I'll talk to you about aggressive. This was the entry. Now you got to understand with the market. Let's say you were thinking long. When you saw selling, perhaps that's the market. That's what the market does to you. It tends to, if you get a good entry, or if you're thinking in a certain direction, the market, for example, the momentum, the pullback, and you see the pullback hold, for whatever reason, it's a good trade. Sentiment all points to the right trade. The market will always have you doubting somewhat with lower highs, etc. So that's why I stayed in that trade, because this was valid. This was still valid. Now, if this stop loss, normally if I'm trading, this stop loss is 10 pips, okay, 15 pips. It's worth the stop loss. It's worth me staying in that trade, because let's put on a moving average. 1 second. Let's put on a, and that's why we use things like moving averages and things like that. They do help keep you in the trade. Why am I doing this? Normally it comes here. Right, we'll put a 55 on, right? Okay. See that? It barely breaks the 55, it holds the 55. So when you use the guppies or you use a certain strategy method, you have a way to keep you in the trade. But then again, higher low, higher highs, price action also. All together, it's in used with the method, works to keep you in the trade. Right, we'll just end that part there. Just a half an hour video. It was pretty good, I think. Thank you very much, Prince, for being on. Cheers.
Thank you.